What is the absolute best way for a total beginner to start investing with just $100? It's a question I get asked all the time. So 4 years ago, a little experiment was started to find out once and for all. We took $100 and invested into 5 completely different things. And today, we're going to break down exactly what happened. But let's be honest. This right here is the biggest hurdle for most people. There's this huge myth that you need tons of money to even get in the game. Well, this entire explainer is designed to show you not just that it's possible, but to lay out exactly how these different paths can play out. So here's our game plan. First, we'll set up the experiment. Then we'll meet our 5 contenders. We've got stocks, real estate, crypto, and some safer bets like gold and funds. And finally, the big reveal, we'll tally up the results and figure out the single biggest lesson from all of this. Let's do it. All right, to run a fair test, you need 2 things. You need your contenders and you need the criteria you're going to use to judge them. So think of this as our own little investment bake-off. Here they are, our 5 contenders. Individual stocks, real estate investment trusts, or REITs for short, cryptocurrency, good old gold, and index funds. And we're going to judge each one on how tough the learning curve is, if it kicks off any passive income, how tax-friendly it is, the overall risk level, and of course, the final 4-year result of our $100 bet. Let's get into our first one. First step to the plate, individual stocks. This is what most of us picture when we hear the word investing, right? Owning a tiny piece of a company you really believe in. It can be super exciting, but as we're about to see, it is a tough game to play. Now, picking a winning stock isn't just throwing a dart at a board. Well, not if you want to be successful. It takes some homework. Think of these 3 documents as your pre-flight checklist. The income statement, that tells you if the company is actually making money. The balance sheet shows you what it owns versus what it owes. And the cash flow statement, that's crucial. It tracks the actual cash moving in and out. Put them all together, and you get a real picture of a company's financial health. So, the big question is, how on earth do you do this with just $100 without losing it all on your first try? Well, 2 incredible tools make this possible for beginners. First, demo accounts. So many apps let you play with fake money, so you can learn the ropes with 0 risk. And second, fractional shares. You don't need thousands of dollars to own a piece of a company like Amazon. You can buy just a tiny slice of 1 share. Honestly, this is a total game changer. But even with all that research, it is incredibly risky. To show this, for the experiment, a dart was literally thrown at a board of stocks while blindfolded. And where did it land? Samsung. After 4 years, that $100 investment was worth just $67.72. Ouch. But this perfectly illustrates the risk. If that same dart had landed on, say, Nvidia, that same $100 would have exploded to nearly $1,000. It's a game of skill for sure, but also a huge amount of luck. All right, next up, we're diving into 2 of the more modern ways to invest, real estate and crypto. These are totally different animals compared to traditional stocks. Okay, a REIT sounds super complicated, but the idea is actually really simple. Imagine you and a few thousand of your friends all chip in to buy a massive office building or a shopping mall. Then you all get to share the rental income that comes in every month. That's basically a REIT. It lets you invest in big-time properties without any of the headaches of actually being a landlord. Plus, they're famous for paying out high dividends, which is awesome for passive income. And then we've got crypto, digital money, completely outside the control of any government or bank. For some people, it has created unbelievable wealth. I mean, Bitcoin was the best performing asset of the entire last decade. But for so many others, it's just a story of lost fortunes. It's incredibly volatile, it's speculative, it's part investment, part high-stakes gamble. And it is definitely not for the faint of heart. Okay, let's move on to our last 2 contenders. These are often seen as the more traditional, maybe even boring options. They're less about hitting a home run and more about protecting what you have and just growing it nice and steady over time. People have trusted gold for thousands of years. It's what you call a safe haven asset, because when things get crazy in the economy, like when inflation is high, gold tends to hold its value. But here's the key thing to understand. Gold is purely a store of value. Unlike a stock or a REIT, it doesn't pay you anything. It doesn't generate income. It just sits there, hopefully holding its worth. And last but not least, we have index funds. Now imagine owning a tiny piece of all the biggest companies out there. We're talking Apple, Microsoft, Amazon, all at once with a single purchase. That's an index fund. Instead of betting on one single company to do well, you're betting on the entire market. It's the ultimate way to diversify your money, spreading your risk across hundreds of companies with just one click. All right, this is it, the moment of truth. We've met all our contenders, we know the rules of the game. So after 4 long years, how did our $100 investments actually do? Let's check out the final numbers. Let's start with the first 3. Our unlucky dart throw, Samsung, ended up losing more than $32. Not great. The REIT, which was mostly in commercial real estate, kind of struggled, but the dividends it paid out managed to pull it into the green for a small $10 gain. And gold, our safe haven, it did its job. It protected our money and grew it by a pretty solid $40. So 3 very different stories. But now for the real game changers. And here we go. The S&P 500 index fund delivered a fantastic, steady return, turning our $100 into almost $180. A really solid performance. But the wild outlier, of course, was Bitcoin. It turned our $100 into an incredible $652. I mean, that is just a staggering return, but I have to say it again, that kind of growth comes with extreme risk. So yeah, while Bitcoin had that mind-blowing return, the favorite investment for most people, and especially for beginners, is the index fund. And this quote from Mark Tilbury, the guy who ran this whole experiment, sums it up perfectly. Why? Because index funds offer the best balance. They're dead simple, they're super low cost, and they have a proven history of delivering solid, reliable returns. But if we zoom out for a second, the real lesson here isn't about which asset won the race. The real winner is a concept, compounding. It's that magic where your earnings start to make their own earnings. It's like a snowball rolling downhill, getting bigger and bigger. And what that really shows is that the most powerful asset you have isn't your money, it's your time. Starting early, even with just $100, is the true secret to building wealth. So the biggest takeaway from all of this is just to start. We've shown you that it's possible to begin with just $100. You have amazing tools like fractional shares and demo accounts to help you learn safely. The incredible power of compounding is just sitting there waiting for you. So the only real question left is, what's stopping you from starting your clock?